Good afternoon. Yes, I had a little bit of a problems, but I'm back and I can hear you very well. Hope you can hear me as well. As for the outlook of Croatia, and I'll come back to what Elizabeth has said. Also, our joining of the SSM and SRM and ERM. But first, let me try to lay out the way we see the economy and outlook for the economy uh, ahead of us. Of course, we have seen a large drop in the GDP growth last year of 8.3%, which is actually less than we thought in spring or at the beginning of summer of last year, when we estimated that the economy will drop by 10 percentage points. Then the tourism season was better than expected. We improved our forecast to 8% drop, and we ended up a little bit worse due to the second and partial lockdown that we've seen at the end of last year and that we are still experiencing at this moment. Compared to the previous crisis, more than 10 years ago, great financial crisis, we see first we see a different impact of this crisis on the economy, in the sense that it has not impacted uh, in the same way all sectors. Actually, there is a very large difference between the sectors that are subject to the epidemiological containment measures, social distancing, and other measures, and the rest of the economy. So we've seen a very rapid already recovery of manufacturing and construction, and the continued problems in the services sector, which has been hit worst by the containment measures. As we look into the future, we see much more rapid overall recovery of the economy that we've seen during the last crisis. And at the moment, we estimate that the rate of growth of GDP in 21 might be 5%. Of course, this is subject to still very high uncertainty, mostly connected with the epidemiological situation and the speed of the vaccination. Uh, we have seen slower vaccination speed than we expected at the beginning of the year. And the overall outlook, of course, depends on the speed of the vaccination and the removal of the containment measures, opening up of the borders, particularly as we move towards the tourism season, which is always an important in Croatia. As for the external sector, we have seen even in 2020 with a large drop in GDP, surplus in the current and capital account because of the inflow primarily of the EU funds. We've seen a small current account deficit after many years of a surplus, but that has been more than compensated by the capital inflows. And looking forward in next years, we again see increase in the current and capital account surplus. We see both the current account surplus coming back on the basis of very rapid exports recovery, which we see being 25% in 2021, but also related to what has already been mentioned in this conference. And what's the name of the conference? The inflow of the EU money, not just the usual structural cohesion fund, but the next generation or recovery and resilience funds for Croatia. And this inflow will be really large and will strongly impact the performance of the current and capital account. We still have around 6 billion of euros which have not been used from the current envelope, and we're seeing 24 billion euros coming into Croatia in next years, and that will certainly dominate the financial flows. Of course, it represents the opportunity for the economy to grow faster, but I would say it should also foster the structural reforms necessary not only to create a one-off growth on the back of the larger investments, capital accumulation, but also to spur the total factor productivity growth, which is a key for a sustainable convergence of Croatia as we move towards the euro. Labor market has been this time around not hit hard. We only saw at the peak 50,000 jobs lost. Drop of the employment in 2020 was only 1.5 percentage points, so much less again than we saw during the last recession in 2009. And this is largely due to the support, fiscal support provided to the economy, particularly to the labor market, keeping the jobs. And we also expect the labor market to recover rapidly, and it has already largely recovered as we speak. And soon, I think Croatia will again talk about the lack of the labor force, which was probably the top problem of the businesses before the pandemics hit. Banking sector, which has, as Elizabeth has said, now entered into the single supervisory mechanism last year, together with the entry into the exchange rate mechanism. Banking sector is in a very good shape, I would say, very resilient. It has moved through the crisis without too many scars. The capital adequacy ratio is high, 24%, highly liquid. So it's ready not only to withstand the increase of the non-performing loans that we will see after the moratorium measures that we introduced with the start of the crisis expire, but is also capable of supporting the absorption of this large amount of the EU funds that will enter into Croatia in next years. There, the role of the banks will also be important. As you know, these funds are used only in some percentage points to fund the project. The rest should be financed either directly by the government or by the banking sector. And as we see a large inflow of funds, there will be also increasing growth for the banks to process maybe tens of thousands of individual projects to assess them, and they should also play a positive role in that process, given the shape in which the banking system is. Lastly, let me say a few words about also our road to the Eurozone. We have moved, I would say, a key step last year, entering into the exchange rate mechanism. Together with Bulgaria, Croatia is the first country that has in parallel joined what's there of the banking union, namely single supervisory mechanism, which Elizabeth mentioned, but also single resolution mechanism. And we plan to fulfill, of course, all the nominal convergence criteria as soon as possible. The first theoretical date of the euro entry would be 1st of January 2023, but it also depends on the meeting of the fiscal criteria. That itself, as I said in the beginning, is dependent on the overall economic situation, which is dependent on the epidemiological situation and the speed at which the containment measures will be removed this year. So there is a fair amount of uncertainty surrounding all our projections, but I'm quite confident that if not this year, Croatia will very soon meet all the nominal convergence criteria, because we have been meeting all the convergence criteria in the years prior to the entry into the ERM, in the years prior to the start of the pandemics. And I'm sure that we can again have the same macroeconomic data, which would lead us into the Eurozone entry. And for Croatia, Eurozone entry, I would say, is a no-brainer, given that Croatia, I think, is the country that will benefit most by entering into the Eurozone, because its currency substitution is very high still, and that creates a larger foreign exchange risk than is the case with other countries which don't have such a high currency substitution. We have already benefited from our road to the Eurozone in the sense of the perception of the markets, of the rating agencies, and we have also got the help from the ECB in the spring, at the height of the crisis, end of the March, beginning of April, where Croatia was provided a swap agreement with the ECB, which at that time was a very important support. Let me stop here.